Okay, back looking at the gold market. Got a weekly gold chart up here. Um, Fix the scale here inside of MetaTrader, so I had to fix the scale so I could see the price. I can manipulate the price all over the screen this way. And I got $100 handles in here, so we can see the risk level and the kind of the stupid entries. We're definitely in a downtrend here. I guess if you wanted to split hairs on this, you could say that you can draw the trend line like this, or you could say that if I drew it a little tighter here, that we just broke out and we're pulling back. So now that we're pulling back into this thing, is it time to buy gold? Well, I'm definitely going to buy below this price. Right in here. Is that 1263? I wouldn't get too worried about an exact entry there. But I think buying here is safe. Definitely buying down here below 1200. It looks like we dipped below 1200 for a moment there. That was a scalper's dream. If you had a pending order down there, nice. $200. $200 trade on gold. I remember people in the chat room when gold was like down here, and they were, oh, it's going to 900 an ounce. Certainly a buy signal for me. Anybody that tells me that some analyst said gold's going to 1100 when it was at 1200 and it already moved this far, they could be right. I mean, look at this. But here, this is an amazing top bottom. Had you put your order right at the top of that, which certainly on the line chart made sense, right? Because you're getting in. I gotta change the color of that. It just doesn't show up on here. Okay. Let's just start over with that. Okay, there's nothing magical going on here. If you took up price handles off, if that's disturbing to look at, I only use it so I know where I'm at price-wise, because I'm certainly not looking at these numbers over here. I'm totally trading the pattern. Like I can't process all these numbers here. But while that certainly looks cheap, 1150 on gold, even from the standpoint, if I didn't have a chart and somebody told me gold was 1117, 1178, I'd certainly pick up a couple ounces or whatever I could afford, I guess, just for a little bit of a bounce. Even a $100 bounce. I mean, come on, isn't that possible? Okay, so now, well, does gold keep going down and down and down? Well, this is the weekly. If I zoom out without going to the monthly, because I don't want to lose any of the pivot points on this chart. But wow, this is going to be the best trading range for gold now going into this lame duck presidency in the United States, and I don't know, just all the garbage, all the people that are on the gold train. It's just going to be a wonderful bunch of trades. There's just so much opportunity in gold here in this. I think we're going to be in a range here for a little bit. Consolidate for the upside or consolidate a redistribution for another leg down. It's going to take forever to play out, but certainly in the most belligerent charting technique, I guess this is going to be your target to the upside. if you're going to buy here. Of course, if you bought on, you bought here because you've got the argument of this trend line holding. So this is going to walk all the way up to the point at which the bottom dropped out at 1500 and change. Yeah, you could just say 1500. Because I'm going to strip this out and just put the good old handles up there. 1500. So there you go. 1500, 1600. Big fall apart there. But gold's a fascinating situation. I mean, that's a tremendous move. That's a big. But in the big picture, scaling wise, for people, yeah, sure, $700 an ounce. Why not? Come all the way down, retest this top. $700 an ounce. I mean, that was the pivot. When it took that out, that became a bottom. $1,000 an ounce was a psychological easy sell, right? I mean, wasn't that a no-brainer trade? You'll be able to draw a trend line here, and of course I'm sure people were speculating, some people, that we're going to go all the way back down. That was going to be it. 1,000 an ounce, right? That's it. Then you got this double top becomes a bottom on trend line. Now you can start drawing these trend lines. And stairway to heaven until the fatal this bottom becomes a top in price on weekly. Of course, presupposing each one of these vertical stripes is 1 year. That takes a hell of a lot of patience. But yeah, so the decline in gold is not. It's going to take some time if it's going to go down here. But the current picture is really a range bound. I think it's kind of a nice 1400 would certainly be the resistance and 1200 support. I mean, that's a 200 point range, and I'm sure there'd be a lot of thrills and spills within that. If we drill down to the daily, I could certainly see where I'd put my orders would just be right there in this cluster orders down in here, and it's 1 o'clock here. They run the air raid sirens here, give you a little taste of the insurrection. So yeah, right here is the coming up on that. We're forming a triangle here in the daily, and certainly zoom out one more notch. This is the max zoom out on MetaTrader. Yeah, that's but preserving most of these, if you bought here and got in a little bit too early onto that, you were certainly freaking out. But this starts to look like a bar chart zoomed out this hard. But it is hard to trade the line against the. I tried to create a hybrid chart that was line and chart. And there are some of those, but it kind of looks like a mess. And I guess I want to have the nice clean line here. These trend lines are just nice. I mean, moving averages, those are great, but I preferred the linear weighted ones because they hug the price better. And a lot of people would talk about the 200 EMA, and nothing against those people, but how do you trade the 200 moving average? Are you long until it crosses over? I mean, if you ever look, I don't even know what the strategy is based on that. Like, how do you even trade that in the golden cross? If you're making money doing that, man, you're an incredibly talented trader, or you've got great money management, because in the end, it's position sizing and money management on this stuff. But here's another trend line I could draw, which is like the underside of the market, projecting down off of the lows and the steep projection that here This is a projection that became a rollover point, projecting off the lows. And once you know, went beyond that, and it came back, certainly I've seen markets break out of this trend line and just collapse and just go into a whole new bizarre a violent move down, and you can always project them off of this the beginning of the fall, and you're gonna come down, and it's kind of like all roads kind of lead to this, and then that's definitely the total capitulation of that move. And certainly this was I bought here and got killed here because I bought here thinking, really, 1,300 an ounce, and there was people that paid almost 2,000 down ounce. I think I'm getting a discount, and that's why I think position sizing is key. Because if you just bought a little bit here, okay, you bought a little bit there, and then you had money left over, you still had some dry powder to come in here at 1,200 and nail it. Buy that at 1,200 for a 100 point bounce, $100 bounce, and eventually a 200, and you got this wonderful, tops become bottoms and bottoms becomes tops set up right in here. So I think those are the best entries. I think if you run the candles, you would have got filled on that. Of course, you can't see it in line mode. You can't see the fills. And the stop entries, I say, use a wide stop and choose a high probability trade and scale in and scale out, because you put a tight stop in on a big position, you're stopped out, and then it may be psychologically hard to jump back on the train because you think, oh, wow, I just lost. Whereas if you just kind of get in like a little bit, you buy a little bit as it's coming down, and then you can buy more down here and at least recoup this. You're in for the counter trend move, and then you buy here. You didn't make too much. You got to stop. I mean, you can't make money in a market that's going down if you you're taking advantage of this ridiculous price that's a short-lived price. So you're making more money in a faster period of time. You just have to know when it's how to size it. Like here, if you bought into this, and definitely great. I'm sure people got into that early thinking, wow, this is the time to buy gold. If it's 1276 is not a good price, then nothing's a good price. The world's coming to an end. But then if you just scaled in, you bought a little bit, you had money left over to buy it at 1,200, 1198, whatever. But now this double top on the daily, and this is the window that's got to hold. But I'd be buying right about, like I say, I'm not buying because I'm thinking I'm not saying I would buy here because it's gonna go to 3,000 an ounce after this price and never look back. I'm just saying that is going to be a ripe, a fruitful. There's going to be a lot of people fighting over price down here, and I want to be in the battle for the scalp, and to get. I guess the tightest entry I can think of is this is the daily. You broke the trend line, come back. Is tight as I want to get in, would start buying here, and definitely buy all the way down if it sweeps down lower, because that's, to me, the key price is there. But it really depends on your trading style in the end. What you're comfortable with, and definitely a position size.